Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome everybody to another episode of the Wall Street Lab podcast. Today, we had the pleasure to interview Andreas Lukic, managing partner of ValueNet Capital Partners, a mid-sized private equity firm based in Germany. He is also honorary chairman of the Business Angels FrankfurtRheinmain, which is one of the biggest business angel networks in Europe. He's also supervisory board member of several portfolio companies and has a long career all over the private equity space. And today we dive in a lot of topics from angel investing to venture capital and private equity on what makes a good ecosystem in each of those areas and much more. I hope you enjoy it. And if you gained a lot of insights, please leave us a 5-star review because it helps us to grow the show. Tell your friends about us. And without further ado, have fun with our interview with Andreas Lukic. Hi, Andreas. It's a pleasure to have you here. I'm really excited about today's episode. Can you tell us a bit, who are you? What are you doing?
Yes, first of all, thank you to Andreas for the invitation and your initiative. My name is Andreas Lukic. I have, I would say, two lives. I'm heading a private mid-cap private equity firm. And the other side of my business life is being a business angel for now more than 20 years. And as a business angel, investing into startups, building them, help them to grow and to get, of course, financed. And on the other side, I'm involved since 2006, I guess, in some of the, let's say, German, especially Rhine-Main, Frankfurt area community efforts, building a startup ecosystem, investors ecosystem, and other things.
Can you tell us a bit about the difference between single topics? Like you said, you're a business angel, but you also work at a PE fund. Can you lead us a bit through?
Yes, it's basically the same thing, but in two worlds, if I may say. So I was employed in a larger private equity fund back in the 90s, and I got the chance with one of our investors, or one of our fund investors, to do so-called direct investments or private deals or so-called pledge fund or fundless sponsors. There are many expressions in, let's say, in the States and also in the UK. So what I'm doing now since 2000, I have an own company together with some partners, and we do typically private investments, meaning source is family offices, rich individuals, and so on. And we are investing typically 5 to 15 million of equity in typically established companies. Could be a Mittelstand or a mid-cap company, some hundreds to some thousands of employees, or some 20 to maybe 200 or 300 million in revenue, to give you an impression. It could be a typical succession for whatever reason, succession of age or of, let's say, some internal restructuring. And of course, also software companies or digital companies or companies in this, whatever you call it, tech or digital area. And as I was employed in a back then balanced fund environment where we did 100 million deals, but also 100,000 deals, meaning venture deals, I got a chance back in the, let's say, end of the 90s also to work in the States, East Coast and West Coast, also to head one of Germany's first incubators. What now is a common model, but back end of the 90s or 2000, it was completely new, doing things like incubation, accelerating and so on, startups. And I got the chance to co-invest as a business angel from my last years of employment. And let's say it was very interesting to support financially, but also with your network, knowledge, and with other means, startups. And so I was, as a hobby, you can say, as a side business, private business, also business angel since then. And maybe the last point, what I was covering in my introduction, this, let's call it network activity or community activity. I have a good friend, and he involved me into what is now Business Angel FrankfurtRheinmain. Back in 2000, it was founded. He is still on our board. It's a lawyer from Frankfurt. And he told me back then it's a bunch of maybe 10 people, more the, let's say, old boys network, meaning former CEOs, etc., to do something here in the, let's say, German financial center, what is now, let's say, Europe's or continental Europe's financial center for this startup system or for this early stage financing. And so I became a member of the Business Angels of the association in 2001 or 2, I think. And then when I, developed my company a little bit further, I had more freedom and also time to do development, or it's maybe charity is not the right word, but to support also the community. And I decided, why not supporting business angel startups and this, let's say, what is now called startup ecosystem. And so I became board member. It's a, let's say, pro bono charity, in German, aktives Ehrenamt. It's a special kind of activity. So board member, a little bit later also chairman, and I try to professionalize and to grow this a little bit still underdeveloped system, or let's say area in Germany.
You mentioned ecosystem a couple of times. So first question is, what makes a good business angel, VC or private equity ecosystem?
These are now 3 different worlds. Maybe to comment shortly, the private equity world, which is well established. So if you seek a few dozens of millions funding, or a few hundreds or a few billions, I think the market is well established, highly liquid. There is, I think, 8 to 9 times more money in the market. It's more or less overcrowded than typically you need every year on a, let's say, long-term basis. So there are many players, there are many advisors, there are many networks, there are many deal sources, etc. So this market is well established. Maybe in the Mittelstand or in the smaller Mittelstand or the smaller mid-cap area, now it's getting more and more crowded. So even companies with maybe 100 employees now can get a succession or a growth financing or a whatever add-on buy and build financing. So maybe that was new in the 90s. We were maybe 10 years, 15 years behind our Anglo-Saxon friends, but now it's, I would say, more or less solid. The venture area is And what it takes was a question to get a, let's say, good ecosystem in this environment. Of course, money. You need investors. You need fund vehicles, not important if they are now institutional or private or whatever, let's say, partnership or structure. You need, of course, a established advisory network, M&A, and so on and so on. And you need, of course, a certain awareness in the market that if you are, for example, owner of a company, you might think about private equity or different ways of developing your company. And in the venture area, it's a complete different picture. I know that, let's say, Germany, the first ventures were starting in the 80s. So maybe, let's say, 30, 40 plus years behind our Anglo-Saxon colleagues and friends, but it was just a start. And even now we have German or European venture funds, tech buyout funds, or whatever you might call them, from maybe mid-stage, late stage, up to mid or higher, let's say I would call it the big ticket tech area. But even in the venture fund, where a typical fund is maybe in Europe a few 100 million or a few billion. And if you look in now, of course, Asia as a big newcomer since the last years, or the established markets, the States and also UK, there you have much more funds, much higher volumes, 10 to 1 or so. We are lagging behind. And of course, also the same is valid in the business angel area. Maybe I should shortly define also business angel, because that's a broader term. A business angel is typically a private individual investing himself a few 10,000, a few 100,000. Maybe the super angels are investing maybe also a few million, but it's basically the first, let's say 1, 2, maybe also the first 3 years of a typical startup. And people who have, of course, the ability and the capability to invest this money, but also who have time and resources to invest also of their network, trying to help startups to grow in whatever means, business-wise, HR-wise, etc., etc. and who have also time to co-develop this startup. So it's always capital and contacts, and of course also network.
You defined several success factors for each of the ecosystems. As you have done all of the above, does your investment process change depending on what you do?
Yes. So if you group the venture area with the business angels, because it's more or less, let's call it similar, and the private equity area as a different segment, of course, in private equity, you are more quantitative, you have models, everything can be proven. Let's say, if you do a due diligence, if you invest enough time and resources, you get a clear picture, and then you can optimize your investment, your funding structure. You have a clear picture of what you could develop out of this investment target, when it could be either a very nice dividend play or when it could be developed or sold further. In the venture area, of course, this is completely different. So I know that now there are every year new models in evaluating startups or the path and so on. So I can tell you, I know now the market since, let's say, mid of the 90s. I hear this every year. New models, new quantitative, whatever, new means of due diligence, etc., etc. But at the end of the day, in the startup area, you are investing basically in a team. And then in a second place, of course, in the business model, in the technology, in whatever assets or potentials you find in this startup. But you must be prepared, and this is also unchanged. And even if I speak to older colleagues, which know especially in the States, also the market from the, let's say, decades before, it's always a constant. First is team, then you must be prepared to pivot, as in our days, or to change the business model, because pivot is a new term, since a few years, yet you must be prepared to adopt your business model, also your technology model, your whatever service or product model or concept, at least 3 to 5 times. And different than in private equity, always you just close a funding round and then the next funding round should take place, because you have this, I would call it model of 10. Every development stage of a startup needs 10 times more resources. If you invest in a very pre-seed or seed stage, maybe a few 10,000 are enough. And the same applies for a number of headcounts and so on and so on. Then if you go for early stage funding, it must be a few 100,000 typically, and that's the same in Europe and also in the States. Every also big GAFA economy player had a few 100,000 in the first place, and then you go for a few millions, for a few 10 millions, etc., etc. So this funding jump or this jump in needs of resource, this is a very special thing to startups.
That's very interesting. I've never heard of that rule. Does it also mean you also have to have a more than tenfold increase in revenue, in profit? Or is it because at a certain stage, your bureaucracy, your management efforts become more? Or where does that come from, the tenfold increase in funding needs?
It's, of course, a rule of thumb. And it's in, let's say, in Germany, it's especially published by Professor Scheer, now SAP. In the States, there were other authors about it. It's basically this jump in needs of resource, basically for finance, of course, that you can measure very clearly. And of course, management, I would say, structure of management needs in terms of how many managers you need, how deeply involved they get. That's why also in startups, you are changing more or less. If the startups develops very successfully or let's say quickly, you are changing also the style of management. In the first place, founders, but then more professional, maybe employed managers, if you calculate all this. And if you take a look at revenue or at profit, of course it applies. Startups, maybe in the first stages, they are just growing revenues. You know that, let's say, old game of proof of concept or monetization. Of course, just at the beginning, you don't have revenue. It's zero. But then if you go for the first pre-seed, seed, early stage, etc., up to series A, B, C, D, in all of these steps, you should prove maybe some 10,000, some 100,000, the first customer, the first customers, then maybe the first whatever leverage model, employing other partners and so on. Yes, it can and it should be applied, and for profits is the same. But profit is a special thing because startups up to very high funding levels basically don't have any profit. Why? Many reasons. First, you need the money for growth. And then second, it's always a tactical and a strategic question when you're turning a business model into monetization. But if you look at the very successful startups, which are either listed or maybe also privately held, they have huge profit levels and, let's say, double digit in the high area of profit margins.
There's a discussion often about exactly that in your model, that you grow, but basically with very little, if any, profit at all. Don't you think there is the fear that actually you can't turn it into profit? Because with some companies, they keep losing money, but keep getting funding. It's like, yeah, what if we flip the switch, we'll be super profitable, but in the end, they're not going to be. Is this something you see more in recent history, that this is a concern, or just people go with the flow? They believe, and if we flip the switch, there's actually going to be money coming in?
From my just private view of the market, I would say it's really the same. The same discussions I had back end of the 90s and all the years. It's always a, let's say, strategic discussion. The same model applies also to Mittelstand or to, let's say, big conglomerates. You have to decide, is it worth building assets or structures of whatever kind to invest and to have a whatever national, European, global footprint, or maybe a very deep footprint into technology with any, let's say, geographic focus. It's always a strategic decision. Is there value in building up something? Or is there no value? For both sides, you have very good arguments. And if you look at the startup landscape, you can see startups maybe having 5, 10, maybe plus years, no profit, just building up a whatever structure. And you have startups, they are more or less maybe not profitable from the beginning, but you see it's always a almost cash break even. And then the management or the investors decide always, let's have the, let's say, level of zero profit or just, let's say, a balanced cash flow, but invest maximum. And yes, there is no answer. Both it's valid. It depends, of course, of the investor's view. Are they willing to provide funding? If not, of course, you will change the strategy. And of course, also of management or other stakeholders, that you have a clear strategic or, let's say, value-driven view. Is there any value or not in building such a structure?
Okay, that makes sense. I want to go back a bit to what you said earlier about basically at any stage, it's the team you're looking at. With some, it's more supported by quantitative model. With others, it's maybe a different process. But what are you looking for in a founding team? And one interesting thing, you said always team. Is it better to have like a single founder or a team? What do you prefer?
Let's say, even if you have maybe to start with the single founder, there are many which are very well known and very successful. But even, let's say, I know on my level, also single founders, they also have a team. But it's also more the alpha style of player, and let's call it supporting team, the wingman, for example, or whatever you might call them. Or you have really a team where you have different roles with a champion in every roles. Also, this question, I think, cannot be answered because you have also if you look at Mittelstand or big conglomerates, you have both kinds of, let's say, let's call it almost asymmetric teams. One is one leader and maybe 2, 3, 5, maybe not more than 7 supporters where he can rely on, and only in a team they can work. And you have the other opposite of a more or less leveled team, and they are bringing each together in a very complementary and supportive way to success. Both you have. What you always should be aware that these are the two extremes. In between, there is almost nothing. So 2 leaders, 3 leaders, just go away as an investor. This is a very, let's say, high probability for a very big distress. or let's say many people, but nobody is a champion. So in between, in these two extremes, there is nothing. And in my just private opinion, and why do you look at a team, or what are you looking at a team? Can the team work together? Can they sustain the first at least 3 years? Because founding a startup, and now we are talking founding a startup, we are always talking about really pre-seed, seed, early stage, up to maybe late stage. So the first 3, maybe 4, maximum 5 years, can they work together? Is the chemistry good? Of course, is it one of these 2 mentioned team models? Are they frustration resistant? How do they handle not successful times or ways or other things? Are they flexible? Can they react to success or, of course, failure? And of course, are they, how should I say, maybe rational is the wrong word, but do we have a common investor side, team side, other stakeholder side, a common understanding of, let's say, financial or business economics? It's not throwing good money after bad money and so on, but do we know what are our common or joint milestones? What do we want to achieve? When it's better to change or better to go just for a maybe small or mid-sized company? When should we go for a maybe prophylactic sale of the company? Not a fire sale, of course. Fire sales in startup areas are just impossible. And all of this I would, let's say, summarize under this team.
I have 2 follow-up questions. First, how do you test that in a founder or in a founder team? All those what you mentioned, do you sit together with them? Do you look at their CVs, at their previous history? What's the key points to?
So, short answer, all of them, what you mentioned, of course. Of course, you look at their paperwork or the CVs. Of course, you look what they have done before, because it's very important. It's not to criticize them, but to see where you can amend or support the, let's say, building up of a really successful team. Of course, you're sitting together with them. So also there's a rule of thumb. So if you're looking at startup or angel networks, even in the Silicon Valley, it's 100 to maybe 150 kilometer in diameter. This area is such a big. You can do, let's say, personal meetings within maybe 1.5 hour of driving whatever, train or car. That's why, for example, we as Rhine-Main Angels, we all live in the Rhine-Main area. Of course, we are active in the whole of, let's say, center of Europe, but you always need a personal proximity. And if you, let's say, look at this from a startup perspective, yes, of course, we can invest also in Berlin, but maybe not in India, because it would be, I had once, let's say, half European, half Indian investment. Yeah, it's hard to go every few months for the board meetings to get a feeling for the teams. And so, yes, there is some kind of regional, local benefit. And because you ask, how get we a judgment? And I have to say, we, since the last maybe at least 20 years, let's call it angel investments, both sides of the Atlantic, are done by also teams. It's not anymore that one super angel invests the first years on his own, because also, let's say, private investors or angel, they are specialized. So my specialization is I come from the financing area. So my network is there, my knowledge is there, and so on. And other people are very proficient in marketing or in tech, or maybe in HR, what is also very important in the startup area. So angels invest typically also in a team of 3, 4, maybe even more angels. And yes, personal meetings, especially at the beginning, are key.
Do you have any tips for somebody that wants to start a startup and wants to build this network of A, investors, B, maybe other co-founders? Did you see that before, that it is working out? That people that just met at an event and they say, hey, this is cool, we want to build a startup together? Or is it preferable that we have worked at the same company and then we start a company together? Or we've been business partners for 5 years and now we're starting a company together?
Your question in the direction of how the founders should find themselves, or the investors find the founders?
The founders found themselves.
Also here, I think a general question is not possible. I think it's most times good if the founding team if they know each other for some time. And I have seen anything from friends from study times, even school times, of course, working in the same company or segment, because you can be also colleague if you don't work in the same company. But what I have not seen so much, maybe even nowhere, that founders just meet at an event and they say, wow, cool idea, and let's do something together. I would say that's very rare, because it's the same reason. If you're working, especially on a founder level, even business angels are working on a weekly basis at the first months and years with the founders, but founders are working on a day and night basis maybe together. So if the chemistry or the psychology or all of this is not working, just don't do the startup. So they should have a feeling about themselves. But talking about the events or this, let's say, ecosystem from the founder's perspective, yes, what I see or what I have seen, of course, in the States, of course, they have in East Coast and West Coast wonderful systems where even if you don't know anybody, if it's your first time building a startup, if you don't know exactly what to do, you can go into the East Coast and you find nice teams who are maybe searching for a younger or not so experienced, but maybe a co-founder, but maybe with a knowledge in a very special area. But even for this, you need many events, especially, let's say, if you want to get a feeling about, can I work with that team? You need even here at least many months, if not more. And you can observe this meanwhile also in Europe. There are many people in the Berlin area or London area, of course, or let's say other areas. They get to know each other in such a ecosystem, what it's now called.
I really want to dive in a bit more into this ecosystem topic, because you mentioned America, East, Berlin, London. Do you see any difference in those places on how it's working?
Yes, that's now, of course, a big question, of course. But maybe let me start with a complete different perspective. If you are talking about startups and business angels, of course, it's always English or American expressions. And I'm not sure if you know where the expression business angel derives from. No? It's an angel was a Broadway investor into musicals in the 1920 basically years in New York. So it was a wealthy individual investing into musical and other kind of theater or entertainment, because if you invest and if you are successful, it's a huge amount of profit you're doing. And of course, if the musical or whatever is not perceived well by the audience, it's a total loss. And that's why let's say it's now business angels, because then a little bit later in the 30s, 40s and so on, the States were strategically building up what is now called Silicon Valley, meaning clustering high-tech industries for state purpose, military purpose, other purpose, also providing huge tax or other benefits to this area. And then later, of course, private investors were grabbing up in this area, and then we had the business angels. And it's interesting to see these beginnings, because if you go pre-war, then you have Germany or Central Europe as a major hub of startups or business angels. We tracked once this mechanism of investing into technology or scaling up a technological startup very fast. And there is Mr. Gutenberg, who invented for the Western world the printing or the press, the literature, the multiplying of, let's say, literature, the whole printing process. And even with him, we can see he had certain private investors supporting him in how to do this printing and publishing processes and how to get this startup funded and also founded. And if you think about Siemens, Mannesmann, Zeppelin, and many, many others, most of the German names you would now recognize as huge conglomerates, either active or also passive ones. They were founded always in the same principle, somebody having a great idea, a team, of course, and then private individuals supporting, etc., etc. And after Second World War, somehow we lost this capability or this area because we had other problems in Europe. We lost this, and then of course the States and later and the UK were catching up very quickly, of course, currently also Asia. Do I see any differences? Of course. If you see the States, for example, also Israel, these ecosystems are highly driven by national interests. Not to say military, secret service, others. There is a reason why cybersecurity or other, let's say, investment areas are so well perceived or well established in this, let's say, areas or regions of the world, to put it in a diplomatic way. And you have same things what you can observe now in China. There are many industries which are also state-driven or driven by the strategy of political conglomerates, if I may say so. In Europe, you have a little bit different way. Currently in the startup ecosystem, we are still technologically driven, and we still try to have a, let's call it, supporting function also for our established clusters of industry, clusters of knowledge. And there's no judgment, is it now good or bad, but you have different, let's say, viewpoints about this. The EU is a more research-driven network of startup clusters, and other countries too. One of the big, let's say, differences is the financing chain or the financing ability and capability. If you look at Silicon Valley, for example, always, you can tell, as a little bit an ironic joke, almost nobody is born there. Almost nobody, or just a few people, are educated there. If you look at the huge number of founders and the huge number of very successful startups there. So the founders, the entrepreneurs, etc., they are in a high volume migrating into the Silicon Valley, into East Coast, etc. And why is this so? I think, let's say, the most studies I have read, I have listened to speeches, etc. It's this availability and it's this financing chain. You go there because you get seed financing, early stage, up to an IPO, of course, or big ticket exit opportunities. You can be more sure on the safe side if you go to these regions, to either, if you are this alpha-driven, what we spoke a little bit before, founder, and you're leading your team or you're part of a team, you can be highly secure that you get your financing done. And as we have learned, you need, especially the first 5 to maybe 10 years, financing is key. Without financing your business model, you cannot be successful. And in, of course, first West Coast of the States, then now, since a few decades, also East Coast, Boston, New York, conglomerate area, of course, London, and let's say others, there you can be sure about the financing chain. So you go there. And that's a big difference, because in Europe, let's say continental Europe, maybe to not talk about London area, we are not so good in this financing chain or financing capabilities.
I was actually prepared to ask exactly what is this pull to Silicon Valley and why is it? And I would like to have a follow-up question on that. Do you think that's going to change because cities like Berlin or like Frankfurt are catching up? And then maybe a bit later, especially you mentioned Asia. Is China, is there maybe the next Silicon Valley, or is it Shenzhen or Singapore?
So let's maybe first go back to the startup ecosystem. So financing is key, or financing chain, that you have all kinds of financing for all stages prepared and available in an easy and transparent and accessible way. But of course, we have to add factors for scalability, meaning there should be business or end customers in an easy reach. There should be other, let's call it conglomerate, mid-cap companies, other startups who are able and willing to cooperate in a very broad meaning maybe you need technological partners or sales partners or whatever. So even this mingling up of scaling up a startup, it's much easier in a well-established startup ecosystem. And let's say next factor is also availability of human capital, or also of intellectual, let's say, research capital, if you call it, resources. So there are many factors of a startup ecosystem. And if you differentiate this, of course, the Valley has all of this factors well presented, including nice weather, a nice environment, etc., etc. So I think the valley, of course, will stay in place. If you look at East Coast, West Coast, if you look back a few decades, it was a big difference. But now, for example, East Coast is also well established. And of course, if you look at other, let's say, Champions League startup ecosystem like London, Greater London area, also Tel Aviv, Israel, and of course, Asia. There you have to see, of course, this startup ecosystem world is developing rapidly from one center. Or a few decades ago, you just had one center. You have now a multipolar world, as also in politics. So I think this will stay. Of course, Europe is catching up. If you just take a look at the last maybe 10 to 20 years, there I would say yes, very fast catching up. In Europe, we can talk maybe separately. Now we have also many of these startup ecosystems where I would say it's not maybe Champions League if you compare directly to Silicon Valley. Continental Europe, yes, there is, of course, Greater Berlin or Berlin, including Leipzig, Potsdam, and so on. There is, of course, now Frankfurt-Rheinmain area. There are also other areas like Paris and so on. And we are catching up, but not so fast as the Asians did. Now, if I remember the world from the 90s, maybe you mentioned Singapore or Shenzhen, they have not been really on our, let's say, scene. They have been for Hong Kong as a financial center, Tokyo, of course, but more for the old industry, let's say financial industry players. And now they are developing, like I said, if we are developing fast, they are developing light speed. You have now developed, more or less developed, Shanghai area, Shenzhen area, let's say area, always the greater area. You have Singapore and also others in Asia. And they will also stay, in my view, because China needs them, so they will just stay. If we would see one or more independent, what I would count Singapore in this world, more independent Asian centers, yes, I think at least one or two have enough place. What we will see, let's say, collaboration between these startup centers. If you take a look now from a German perspective, a few years ago, we did not really have, in the startup world, not in the Mittelstand or the conglomerate world, but not really established routes of whatever trade, financing, collaboration into East Coast, West Coast. Now we have. Israel, I think it's well established in both ways. Asia, we are learning quickly, we are building that up. And so, yes, we will have definitely more of the startup centers. If, the specialization is also taking place, just if you mentioned Shenzhen, of course, they are hardware focused. The Valley, I would not just call them software focused. If you look, for example, at Silicon Valley, they have transformed a few times. They have been startup focused, the old garage story, Hewlett-Packard and so on. They have been software focused. I think about Microsoft and others. Now they are whatever, Web 2.0, 3.0, social, whatever, focused, and maybe they are just discovering new areas of bio-industries or whatever.
It's a very personal question because I lived in Singapore, so that's why I would like to hear your opinion in Singapore. Of many of the things you mentioned, so capital, yes, definitely in Singapore, just judging from the wealth of the country. Human capital, I would say absolutely, because I think some of the best universities in Asia, like the top, like 2 of the top 10 universities are probably in Singapore. And then I would say what is missing from my point of view is the scalability of the reaching of the customer. How do they make up for it? And are they making up for it? Do you think they can keep this up in lightning speed as Shenzhen?
I fully agree with what you said. And you mentioned a very interesting point. It's this scaling up of businesses. And it's a strength of Europe, which we are not playing in the right way currently. I think there can be a lot more could be done there. And you see this very clearly now for many, many decades in the States. This collaboration with government-owned, private-owned, listed companies or whatever companies in any way. Just think about Cisco back a few decades. They built it up themselves as a network of companies, acquiring a few hundred companies or startups every year. So you need that. It's not only customers, it's also contact or access to other, let's call it corporate or institutional partners. And that's a very high disadvantage in Singapore. And they are doing now the best what they can. They have now the ASEAN partnership with Malaysia, Indonesia, and so on. But still, it's an island in between of many countries. You see a similarity to Israel. Israel is also an island in between of other countries, let's say, maybe not so supporting each other like maybe in Asia. And what you can see clearly, it's a very strong connection to the States. What you more develop and finance to a certain degree in Israel, you are then developing further or collaborating with the States. Now, the last years, more and more also with the European Union. So Singapore, what can they do? Of course, they need to partner. And I think they are trying it. If this will develop further, let's see. They have very strong other, let's call it blocks or let's say systems, political systems around them, and they have to see if there is a place for such partnerships.
Yeah, and also I think if Israel cooperates with the US and with Europe, it's like well-developed, very rich countries, whereas in Asia you still have a lot of developing countries. Very interesting how this is going to turn out. Now, to stay in the area of ecosystems, how do you try to grow the Frankfurt-Rheinmain ecosystem where you are like very present?
We are trying with our limited resources to develop. And that's now, again, let's say European or let's say German point of view. Maybe a few years ago, back to 2000 or mid of the 90s, I think the public or also political or industry awareness in all of these three areas was not very high. If you ask about startups, innovation, financing of innovation, or whatever now you could ask, let's say, questions coming from looking into the valley, other areas. So it was not really present on nobody's agenda. And this changed a little bit with the new market and also with, of course, this, let's say, golden age of globalization where we met a Microsoft every month looking at companies. So, wow, they don't have been present maybe a few years ago. And now they have what we talked about, multi-billion profits and multi-billion of revenues. And there was a very good initiative back in 2000 from the city of Frankfurt, from the German Stock Exchange, the Deutsche Börse Group, and also from the country of Hessen, that a few players put together something like this angel network. That was more or less the nucleus of all of that they say, okay, let's do a club. And they said, okay, the same what you talked about Singapore, we have enough wealth or enough of, let's say, if you count the wealth, if you count the involved people, the involved, the potentially involved institutions, corporations, and there is enough power now how to connect. And out of this nucleus, we try there, and I have to say, it's still an association, meaning it's a more or less pro bono activity. We are doing this as a hobby. We have limited resources. And now what we did develop is, on one side, this Business Angel FrankfurtRheinmain. It's the, by membership or headcount, the by far largest German, continental European, I can say so, network of angel investors, where we now have, I have always to say, we look at some 900 startups every year, what is for our environment a very high number. I know for the States and for others, it's not so high. But if you take into account in Germany, you have maybe 1,500 to 2,000 relevant and new maybe startups or whatever kind of founding of companies every year. So it's just a high number. We have a few hundred members, associated members. We do now closed events, 2 or 3 every month, meaning inviting the best. We have a screening process, 20, 30 colleagues engaged in some kind of investment committee, screening committee, and we invite always the best 5 to 6 startups every month to present themselves. We do 20 to 30 seed early stage investments every year. So we are active And of course, we have this network effects. A startup needs around the world, it's always the same, 3 to 5, attempts to get the first financing and the second financing and the third financing. So we are also a place to provide feedback or also mentorships and others, that we say, okay, maybe it was the first time, maybe you did not get an investor or whatever you searched in our network, but we can provide you. We have a lot of partner network. Meanwhile, you have in Germany, German-speaking Europe, also, the broader Central European or continental European area. We have partnerships to almost every of such association, to other startup ecosystem, other cities, and also the network is developing indirectly. And then we have in this, first phase, I would describe, we professionalize our processes and we a little bit worked on, also press and other, visibility. I can say since the financial crisis, for whatever reason, it was a little bit connected to that, beginning of 2010 onwards, this topic of startup investments or startup ecosystem was catching up for European means in a very high pace, meaning the political, the city, the country, also the national, the European level get involved, all of the typical players, what you would think about. They also tried now to develop partnerships or activities. And currently I can say we have many activities. We have industry cluster in, chemical process, pharmaceutical area. What was the first one? It was not fintech. Then we have, of course, fintech, insurtech, proptech cluster activities of many kind. We have now started in the third phase even to get a little bit broadening our, technological capabilities. There is an activity, AI, artificial intelligence, in financial services, because that could be an area where really Frankfurt-Rheinmain could be first class. We have the regulators here. We have many players from the financial, insurance and other, asset management markets. There is an EU program, Horizon 2020 in RegTech. Also this AI in financial service will be somehow regulated, meaning explainable AI. This area is not established yet. So we try to do what I would say necessary structures or services that we deepen that, getting more private individuals involved. We are reaching out now to the regions around Frankfurt. We get a size as you would perceive in a real metropolitan region, but also we are going into industry cluster and of course this specific, I would call them knowledge clusters. Always, maybe last point to that, we have to attract private investors. So we have to have content, deal flow, a nice environment. Investors want to get in touch with each others, etc., etc. We have to attract startups, meaning somehow people who are studying maybe 100 kilometers around Frankfurt, that there is an opportunity to found the company here, that there is money and partnerships, but also to attract also founders from outside our conglomerate, that we can say we are the financial center in Germany. We are, I would say, the financial center in the Eurosystem, in the European Union, and one of the financial centers globally. So there must be a value also in the startup area. It's always funny if you talk about Germany. Frankfurt is one of the well-known financial centers without, I would say, currently global, or in a global reach, startup activities. Berlin is the opposite. Berlin is a very well-developed startup ecosystem, but with almost no financial center or financing chain activity. So it's a very interesting German thing. All over the world, all ecosystems, what we have mentioned, is always the connection between a financial center or the financing chain and the startup ecosystem.
You've mentioned a lot of technologies already, AI, blockchain. What do you think about what's any upcoming trends? Do you see any very promising technology?
Yes. The first thing is there are always upcoming trends and upcoming new technology. And in my chairman role of this network, I'm listening to many of the, scientists, to other investors, to other, studies. And you can see, of course, We have the mega trends, that we have the big issues in health, in the demographic, and in the urbanization and other things. What I know, they are commonly known. And of course, also in the startup area, somehow there will be a connection. But much more interesting for the startups is, I would say, the two big worlds in maybe bioengineering, biotechnology, what I'm not so proficient, but of course we have in the region many of these players, in the greater region. And there's a lot of things going on in how we can be healthier in a much more efficient way, in a much more profound way. And the other, let's say, big trend for the startups is, of course, all what you would call now information technology, but also, of course, connected to hardware, connected to clouds currently. So always you need some kind of device, not important how small it might be. You need some kind of transporting system of this services of this intelligent, if it's not a cloud or application service providing, what it was called in the 90s, or data center, whatever clusters, but you need this. And Frankfurt, by the way, is the biggest data hub in the world. That is something not so commonly known, but most of the data centers are here in the city. And of course, software is developing, and I would not, let's say, stress so much AI or blockchain, because it's just not a buzzword, but it's maybe an expression for a technological trend. If I would now say new means in communication back in the 90s, email systems, that was also a great starting of much more to come. Or electronic commerce, now, let's say, trading goods over the internet or almost anywhere, anytime, is much more than it was back then electronic commerce. So there's much to come in these two areas. And of course, these are areas maybe for 5+ years. And we have now mentioned, of course, AI is the big trend currently. People are in blockchain too, of course. And people are investing now since 2-3 years heavily into this area. And always, if you see many professionals, much money, and so on going into startups, meaning people have researched some kind of whatever technology, product, services, maybe 5+ years before. And now the wave is coming, attracting more talent, attracting more money, especially attracting, or I would say being front of mind, of course, of the industry players. Now, especially in Germany, we have also in the States, but also in Germany, the AI strategy that, of course, every of our companies, not important in which automotive, machinery, whatever health, or whatever you might call our strengths here in Germany, sector will have AI applications, meaning that the machines will be more, let's say, not intelligent, but capable of doing more things more efficiently. And the same for blockchain, that could be a groundbreaking technology, changing like the email, I always say, or like, let's say, communication, peer-to-peer and others, changing whole ways of whole industries doing business together.
Perfect. That sounds so promising. I'm really excited to have hopefully a lot of our listeners maybe turn out to be founders. So with that in mind, would you have any last tips that you want to give our listeners if they want to start a company, or on the other side, some words on if they want to start in VC or in private equity? So maybe you can shine a light on both worlds.
So first, to the listeners who feel maybe excited about now investing into startups or somehow connecting to startups. So if there is the financial capability and willingness, but also the willingness of interacting with founders and startup teams, providing network, knowledge, etc. Of course, you can contact our or many other angel networks, or let's say our other associations. And I think there is a great way of being active. And there I can maybe recommend, don't be, how should I say, let yourself time. The typical new angel or new, let's say, interested people in this startup area need maybe a year or two to getting really know how this world is functioning, how other investors, founders, startups. So let yourself time. There are many events, there are many networks. Just try to get into it. And maybe as a motivation, we are 20-1 behind the States. Yeah, so there must be at least 10, 20 plus people interested in this area. Maybe they just don't know how to enter and why is it so fun working with startups and being active in this area. And maybe to the colleagues listening, for the potential founders, not important of what age you are. They are founders studying and maybe leaving the university in the last years of not having finished the studies. They are, of course, founders in the first years of their professional career. And they are also founders in the 40s, 50s, and even higher, which have gained maybe, let's say, a proficiency as a serial entrepreneur or as a seasoned manager, meaning knowing some areas of whatever knowledge that might be much more in depth, and experience is also in the startup world not to be underestimated. If you also look there in the valley, you always have in teams not only the youngsters, but also very seasoned managers, industry players, investors. So if I may talk to all of these potential founders, I can say, if you have the time and willingness in getting yourself involved into founding a startup, you must have at least a year, 2, better 3 years of really time, of free time in your life that you say, okay, I will try with a high probability of failure. But if I try it once, I get much more experience. And typically good founders have tried it 1 time, 2 times, maybe 3 times, that they get really experienced in what failures are on the way. How can I build my team we talked about? How can I enter the market? How can I finance myself much better? So also here, leave yourself time. And there is time even if you are now studying or if you are in the middle of your career, just do it.
Awesome. I love the just do it as do you have any other final words that you want to share with us, or anything where people can find out more about your business angel network or yourself?
Yes, of course. If you're interested in our work or getting yourself a little bit more into this startup world, of course, you can find me on LinkedIn. You can find Business Angels FrankfurtRheinmain in the internet. You can find our artificial intelligence or fintech or others activities in the web, and just drop us a note, an email, and I would be happy to get in touch with anybody.
Perfect. Thank you so much for the interesting insight into business angels and VCs and private equity. And thank you so much for your time, Andreas. It was a pleasure.
Thank you for your interest. Thank you too.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
The information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. Any copying, distribution, or reproduction of this podcast without the permission of the creators of the podcast is strictly prohibited.